It's a quick news day today, so let's jump right into it. Australian interest rates were raised the expected 25 basis points up to 3.1% from 2.85%. This is likely to help fight inflation that has been inching higher, currently sitting at 7.3%. Australian GDP numbers will be released tonight at 7:30 p.m. Eastern Time here in the US, so be sure to come back tomorrow for updated numbers and analysis. Now, with all that being said, let's check out the Edge Finder. All right, so here we are in the Edge Finder. We're going to start off by taking a look at the market heat map so that we can see how far all of our currency pairs have moved so far today. And taking a look at the US dollar pairs here, USD CAD is our only US dollar pair that is performing better today so far. Again, this is the market heat map, which shows you how much each currency pair has moved throughout the day so far. So this will continue to get updated until the day is officially over, but so far we have GBP USD down minus 0.24% as our biggest US dollar pair to the downside, where USD CAD is up 0.53%, our biggest US dollar move to the upside. Our major indices here, the NASDAQ, S&P 500, German 30, US 30, UK 100, and JP 225, all of our major indices are down except for the JP 225. So that's interesting. Euro pairs are a little bit split, but I can go ahead and I can see a trend here looking at Euro and Pound, the Euro and Pound. It looks like our Canadian dollar pairs are doing pretty well today. USD CAD is up, Euro CAD is up, GBP CAD is up. So Canadian dollar not doing so well, but pairs or currencies paired against the Canadian dollar are performing fairly well. Most of our pound pairs are down today. The yen, I was surprised that most of our yen, or maybe even all of our yen pairs, were up yesterday because recently this had been the case. Our yen pairs were doing quite poorly. And here we can see the inverse. CAD JPY is actually a big mover to the downside, down minus 0.54%. Again, here as well, CAD CHF down almost 0.5% on the day. Are you interested in our market scanning software, the Edge Finder? You can try it today for free. Click the link in the description and fill out the form letting us know you're interested in the software. A member from our team will contact you with trial access information. The Edge Finder has brand new features like price forecast and economic news. There has never been a better time to try out the software for yourself. Click the link in the description and try it out for free today. And rounding it out, we have our New Zealand dollar and Australian dollar pairs. Again, Aussie CAD and NZD CAD, big movers to the upside today. So Canadian dollar falling off pretty hard so far today. Let's take a look at the Scorechart Summary. And oh my goodness, people, we have a new strong buy that is not a New Zealand dollar pair. I cannot believe it. Let's get rid of the indices and commodities. If you're familiar with these videos, you know that pretty much for the past 2 weeks straight, we've seen nothing but New Zealand dollar, both at the top and at the bottom. And that is still the case down here at the bottom. GBP NZD, Aussie NZD, Euro NZD still have not moved, still our strongest sells here in the Edge Finder. And NZD USD and NZD CAD are still up near the top, along with NZD CHF and NZD JPY. But USD CAD has officially taken the top spot, our strongest buy. We have a new winner. So perhaps we'll take a look at that, or perhaps we'll take a look at Aussie CAD because we did have new Australian interest rate numbers. In fact, yeah, let's go ahead and take a look at Aussie CAD just so that we can get a sense for possibly why the Canadian dollar is performing so poorly at the moment. And we can take a look at these new Australian interest rate numbers. So here we are in the Australian CAD breakdown page. Score of +3, not a super strong bias, and we'll find out why here in just a second. So our COT data is a score of -1. Our retail sentiment is a score of +1. We can take a look at those numbers right over here. So the Canadian dollar institutional wise, 40.67% long and 59.33% short, whereas the Australian dollar is 30.55% long and 69.45% short. So again, if you're familiar with these videos, you know that I mentioned that we don't consider something to be a sell or buy bias, retail or institutional wise, until it crosses a 60% threshold. So Canadian dollar sitting at 59.33% short is right on the edge of us being able to consider it as being officially shorted by institutional traders. Yes, there is a slight favoritism towards the short side for the Canadian dollar, not quite as strong as what we see here for the Australian dollar, but because it has not officially crossed the 60% threshold, we do still consider this to be pretty much 50-50, although it is pretty clear that this is getting, again, slightly favored on the short side, a little bit more heavily favored on the short side here. Retail traders, on the other hand, 89% short, 11% long. So vast majority of retail traders shorting this pair at the moment. Our seasonality is a score of +1. We can see here that in the month of December, our 10-year average and last 5-year average both have this sitting above this 0 line here, meaning that typically speaking, this pair tends to perform better throughout the month of December than it came in at, which so far is the case in our current year average. And looking back at November, that was the case as well. Again, this just simply means that whatever price point this pair comes in at the beginning of the month, typically it does finish higher according to our seasonality scores here. And so far that has in fact been the case in the current year average as well. Our trend reading is a score of +2, and we can see that we've been fighting to make these new higher highs, these upper moves. We've had slight upward move and then a little bit back down, up and then a little back down, and then we're fighting to make this this nice strong upward trend, and our price forecast predicts that will continue to be the case. So we'll have to see over the next couple days if this continues to move upwards, although our trend reading score with a +2 does in fact believe that will be the case. Lastly, our GDP growth and unemployment scores come out to +1s, and inflation and interest rate scores come out to -1s. So fundamentally speaking, this pair is pretty split. We can take a look at those numbers right here. Aussie GDP growth 0.9% compared to Canada's 0.7%. Australian unemployment 3.4% compared to Canada's 5.1%. Inflation for Australia 7.3% compared to 6.9%, and Australian interest rates, here are our brand new interest rate numbers for Australia, 3.1% compared to Canada's 3.75%. And again, we can see here there's our 25 basis point rate hike to move these interest rates up to 3.1%, which again I believe is most likely to help curb some of this higher inflation that we're starting to see. We can see that inflation has continued to rise, up 1.2% so far, and so perhaps these higher interest rate numbers will help bring this inflation that has been slowly creeping higher and higher, help to bring it back down a little bit. So that was a look at Aussie CAD, and to be honest, I'm not quite sure what to make of this pair because fundamentally speaking, it is very split. Of course, we do see that institutional traders and retail traders look to be short on the pair at the moment, so perhaps they are selling off, thinking that this market will not continue to go higher, but we'll just have to see if that is the case or not. I meant to go back into the Scorechart Summary because I think really quickly we could take a look at USD CAD simply because it is our strongest buy here in the Edge Finder, and I'm excited to have a new strong buy in the Edge Finder. So USD CAD, we'll break this down really quickly. I'm going to skip over the Canadian dollar numbers only because we just went over all of them, but we can take a look here. Strong buy score of +7, COT data and retail sentiment both coming out to scores of +1. And we can see here institutional traders heavily favored long on the US dollar, 75.06%, 24.94% short. So pretty heavily favored long on the US dollar. Again, we've already seen the Canadian dollar. And retail traders are 82% short, 18% long. So retail traders very heavily favored short on this pair. Seasonality, we can see here that our last 10-year average and last 5-year average we can see that in the last 10 years, the average does have it slightly above this 0 line here. But for the last 5 years, if we take a look at that, it does actually sit right on that line with a score of 0. So not much change there. Current year average, however, does have it below that line, meaning that this pair at least so far has not performed quite as well as it has in the past. Our trend reading is a score of +2, and we can see again nothing but upward momentum here pretty much. We came, had a little bit of a peak, shot back down, but then shot even higher, forming a new high here. And we are pretty much right at that level of support or resistance rather right here. But our price forecast does project that we will break out of that zone there. Lastly, fundamentals, GDP growth, unemployment, and interest rates, all scores of +1, inflation score of -1 here. So the US dollar is in fact beating out the Canadian dollar in 3 of our 4 metrics here, meaning that fundamentally this is looking pretty bullish. US dollar GDP growth, 2.9%, US unemployment, 3.7%, US inflation is the one area where we are higher or worse off rather than the Canadian dollar, 7.7% inflation in the US, and US interest rates currently sit at 4%. Now, here's some analysis from Trader Jake and Trader Nick.
Let's see what's next. Some people requesting gold, dollar CAD. Yeah, let's look at dollar CAD. What's going on with USD CAD today? We'll do this, USD CAD. Wow, look at this. USD CAD looking really strong here this morning. There was a time in my trading career where every time something would pop, this is just off the top of my head, every time a market would pop, I would think to myself, okay, now it's got to come down, right? This was like early days 101 my approach. Every time I would see something pop like this, I'd be like, okay, it's tagging resistance. It's got to come down now. It is resistance. And that's not, that's half of it, but it's also understanding, the bigger picture, the story of what's going on. So let's look at the daily chart. So here's your daily chart on dollar CAD. And this is going to be a full breakdown for those of you who like dollar CAD or you watch it. Here's my thoughts. Okay. So dollar CAD has this uptrend on the daily chart, right? Pretty strong uptrend too. Not only that, we did in fact start to see this thing want to reverse. In fact, you can see that if we take a look at this, you can kind of see where I'm going with this. We topped out around 1.4, just shy of it. Price topped out, sold off pretty aggressively, and put in lower highs all the way back to this trend line where it found support once again. The key thing here is, though, that on the daily chart, we have this overall higher time frame uptrend. And just recently, we've actually just broken out of a resistance point that was really strong for sellers, right? So if anything, dollar CAD actually looks pretty bullish to me. So I'm not going to buy it here. I know traders who trade the break and they do quite well with it. There are styles for everybody. For me, what I'd be saying is, okay, we've got that breakout on the higher time frame. Let's look for opportunities to possibly go long on this move on a retest. So I'm going to draw my fibs from the swing low all the way to the previous top that we just formed here this morning about an hour ago. And then I'm going to say, okay, well, I want to be a part of this move. I actually want to be long on some of this, but where can I get in? Is the entry here? Possibly. That might be an aggressive entry, but that's probably like the 23.6. But for me, I'm looking probably more in this zone. This is generally where I like to pick stuff up. I like fibs. I've been using fibs for a very long time. There's nothing, they're not magical. They're not like the Holy Grail or anything like that, but they are a nice little confluence factor that I typically use in my trading. So if I was looking at dollar CAD, right? Let's take a look at these levels and pick out our favorite. So am I going to go for this one? I don't love it, right? Yes, there was a strong pivot there. And maybe if you're very bullish on dollar CAD, this could be a trade number one, right? And if you're familiar with my trading, if you come on the live streams every day, Where are my regular friends at? Type me in the chat if you're somebody who tunes in on a very regular basis to the streams. You guys already know I got huge appreciation for my regulars. You guys are awesome. I have so much support here on the YouTube community. It's been phenomenal doing it. But if you're a regular, let me know in the chat, because you guys probably know what I'm going to say before I say it. That's what we do here. This is trading. Trading is incredibly repetitive, and it's meant to be, right? You know, if you're running a profitable business, you don't change up what you're doing every day. You do the same things over and over. Starbucks sells coffee every single day, and they're constantly trying to figure out, how do we market better? How do we get more coffee in front of more people? How do we get more locations in more places? They're doing the same thing every day, and that's why they're so profitable, right? Trading, same game. We're trying to do the same things every day and sell coffee at our coffee shop, which is the charts, right? Cool. Lots of you guys. What's up, guys? Appreciate you. I really do mean that. Having an audience is such a humbling and cool experience to, know that there's other traders out there who that vibe with my style, for lack of a better word. Like I said, I do like this thing on a pullback, but I've got to wait for the pullback, right? If you're a regular, you know that. Another thing you might know if you're a regular is that if we're looking at this thing, I might take more than one attempt to go long, right? You probably have heard me talk about, having a one or even three opportunities to try and pick up a trade. I don't love this area, so I'd probably skip it. But trade number one idea could be the 38.2. It's all right. It's not my favorite. And trade number two could be where I actually like this a lot, which is that 61.8% retracement. It lines up really nicely with the consolidation breakout right here. Huge break. Love that momentum that picked up right there. So if price did pull back into that area, dollar CAD could actually be a nice long setup based on how I like to trade, right? Momentum, pullback setups, and trying to trail stops. So you guys already know that if you're regulars, but if you're new, what we often try to do is we take trades in baskets or try to do it more than once, right? Entries are very difficult to do, right? It's not every day that I catch a perfect entry. And sometimes I don't really think that you do need to have it perfect all the time. You just need a decent win rate and let your winners run. So let's keep going. We'll take a look at some more charts. I do like dollar CAD, but it's a bit of a ways away before I can actually get involved with this one. So maybe we'll come back. Let's now take a look. Dollar CAD is considered a strong buy on the Edge Finder right now, which is interesting. Though the problem is, again, like I said, it hasn't given us a pullback yet to take advantage of. Let's take neutral out of the picture here and talk about our watch list for the day. US 30 possible buys, S&P 500 and NASDAQ also possible buys.
Get into it, right? So the first thing that I've been kind of looking at on the DXY is basically just this downtrend that the dollar has been in, and we have just a lot to think about when it comes to the dollar right now, right? We have a lot to think about when it comes to the dollar, because here's where it stands. Fundamentally, we actually got pretty good jobs numbers, right? We actually got pretty good jobs numbers at the NFP. We got pretty good PMI numbers, right? So manufacturing is good, jobs are good. The data that we've been getting for the dollar has been good. However, right, the dollar has been very bearish, and even as far as like when those NFP numbers came out better than expected, if we go back to last Friday, right, we can see exactly what those numbers were. These NFP numbers came back way better than expected. Unemployment was very neutral, and average hourly earnings actually went up. Those things should have been bullish for the dollar, but instead the dollar continued to go down. When we look at the DXY, we just continued to melt, right? We had this initial spike, and then we started to melt. And then we have to ask ourselves why. Why did that happen? Why did the dollar continue to go down after those good numbers came out? And the reason is that prior to that, we had Jerome Powell actually make some dovish statements about the dollar. Don't quote me exactly what he said, but he said something along the lines of, at some point, we're going to have to slow down the rate hikes, and we may see that slow down as soon as December, right? So now there's this kind of battle between, are we going to get a 75 basis point rate hike in December, or are we going to get a 50 basis point rate hike in December's FOMC meeting, right? And that's coming up pretty soon now. So the closer that we get to that FOMC, in my opinion, the more of a tug of war is going to be happening between those bulls and those bears on the dollar. NAS 100 taking a dump. We'll look at that for sure. How do you join a trading community? You can check the links down in the description, Philip. I think you'll find what you're looking for. But so essentially we have this battle between camps right now for the dollar. Like who wins, right? Is it the data? Is it the jobs number that would the jobs numbers that would traditionally tell us, hey, you know what? The labor market's still strong. We can do that 75 basis point rate hike. Or do we take Jerome Powell at face value and start to consider a 50 basis point rate hike coming in the next FOMC meeting, right? Also, we do have like some recession fears. We have major companies starting to do some layoffs. So we have just a lot going on for the dollar right now. In my opinion, it is not as straightforward as it has been, right? It's not as straightforward as it has been on the dollar. So for a long time, the dollar was just longs, right? We remember this time. This was a great time in the market to be longing the dollar. Then we broke this trend here, and then it was just shorts, right? Shorting pullbacks. And now the question is, as we approach this level of resistance here, right? As we approach this level of resistance here, is this a shorting opportunity on the dollar, or are we going to be waiting for a reclaim of this level and to get long on the dollar, right? And the truth is we just won't know until we come and test that area, right? And I consider myself a very reactionary trader. I'm not necessarily trying to make bold predictions about what's going to happen about the market because, I could be very, very, very off depending on new data, depending on anything, right? At some point, he's going to back off and tank the dollar. I think probably that has to happen at some point, Nate, because I don't think the current economy can withstand this onslaught of 75 basis point rate hikes, right? So at some point, it's going to temper down to a 50 basis point rate hike, and then that's going to temper down to a 25 basis point rate hike, and then we're going to end up going into a more, zero rate or even negative rate at some point, even if it's a few years down in the future. So that's the cyclical nature of the Federal Reserve and the markets in general. The question is, when is that going to happen? And is that going to happen, at least for our sake, right, as traders who are trying to catch these moves in the next couple of weeks, is that going to happen in the next December meeting? The dollar is going to go to 105.6 and then reverse to bearish. See, I try to not make bold predictions like that, and that very well may happen, Gift. But I just don't know, right? I just don't know. So here's what I'm going to be looking for, right? And I sent this out to my community, and this is what I've been talking about as well, is I have sort of a neutral approach with the dollar right now, where I'm basically just going to be looking at this area right here and seeing how we react on this area, right? If price pushes up into this area on the dollar index, and then we start to reject out of there, I think it may be worth looking at some dollar shorts. And one pair that we could catch that on, right, is maybe like pound USD.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.